what do you think that process is that helps people so much? Is it just taking a second look at something instead of in real time when the emotions and the adrenaline's going?
And that is something that I do feel like I see a lot with multi-day breakouts. So with this one, I had to try to get a little bit more clever with how I traded it.
Hey everyone, and welcome back to another episode of Trading Takes. We have a special guest and a special co-host joining us tonight. So Stan is joining me for our episode with the long-awaited Tim Grittani. Tim, welcome to the show.
Hey, thank you so much for having me on.
Absolutely. So Tim and I actually got to meet at Traders for a Cause in Chicago 6 months ago or so. And I think we really hit it off. We've stayed in touch. And, I've been wanting to do this episode for a while. So I really appreciate you coming back on. And I know that you're, easing back into the markets after some time where you've been, kind of on and off and focusing on some other, great life priorities. But now you're ready to get back into the market. So I feel like we caught you at a perfect time for this.
Yeah. Sorry for making you wait. But yeah, like when we talked in Chicago, I still wasn't really back. And I was like watching all this action from the sidelines. And when we talked about doing a podcast, I was like, I'd love to, but I've got nothing to talk about right now. So yeah, now that I'm getting back into the game a bit, I feel like I've got some things again.
Perfect. Yeah, great things take time. So the whole theme of the episode today, or what we really wanted to do, because you've done many interviews, a lot of people know you. You're a household name, especially in the trading community, and I feel like you've been a big part of a lot of people's journey, really learning trading. So what I wanted to do tonight was really take the audience through a discussion of how you would personally train a trader. And, you and I have talked about, you've designed trading algorithms, and you've thought about like many of the variables that go into like an ideal trade setup. And, a lot of these things that are, they require a lot of factors to kind of input. So that's on like the trading algo side. But if you were to trade a person, which is going to be a different process than trading an algorithm, we really just want to see how you would go about that. So we have a lot of great topics that we'll work through tonight. And we're excited to get going. So are you ready to start talking about this, Tim?
Yeah, absolutely. I'm ready to dive in.
Great. So kind of first things first is, how would you train a successful trader? And then to define what a successful trader would be, we're looking for someone who has consistency. We're looking for someone who has profitability that's able to be scaled up, and someone who's able to implement risk management. And so that not only can they keep those gains, but they can scale up and trade safely. So would you kind of agree with that definition of, is that a successful trader, or how would you think about a successful trader?
Yeah, I completely agree with pretty much all of what you just said in terms of consistency being, I think, to me, the number one thing. When I think a lot about like how would I want to train a new trader, I try to reflect back on like how I handled it when I was first starting and the kind of things that I was doing. And consistency was really like one of the big turning points for me, because with consistency comes confidence. And, I've had, all kinds of ups and downs throughout my career, but I am a far better trader when I can, step into a trade and feel confident about it. And, not necessarily confident that the trade is going to work every single time, but just confident that I have a plan. I trust my plan. I will stop out when I'm supposed to stop out, going back to your risk management thing. And then I'll be okay, if I lose. Sometimes setups don't work.
Whether it's, training a new trader, or let's say someone has experience, someone has market knowledge, and they're looking for like masterclass kind of, training. For each of those situations, how would you really want someone that you're training to view the market? And what I mean by that is like, is that through a lens of like pure supply and demand? Is it like the bulls versus bears? Is it, learning the different games that the different groups are playing? Like, how would you, want someone who's mentoring under you to view the markets in general?
I think the most useful way to approach it is supply and demand, just because that essentially is what affects how stocks move, right? So when it comes to the supply and demand, like I like, for example, on longs, like, I've always been like a buy high, sell higher kind of person, because I try to like pick spots, like high day breaks or multi-day breakouts, where I think that that's a spot where, you might have quite a bit of demand because, short sellers might be getting squeezed here and panicking. Or, hey, everybody knows high day break setup at this point, right? That's a pretty common place for people to want to step in and try to buy stock. So you're going to get buyers from that kind of situation. So where you have to kind of be careful with setups like that. And one of the things that, you mentioned the algos I've worked on, my algos really lacked the nuance of play selection. Because you can look at a technical setup like that, you can think about the entry and the perfect spot to enter, but it's not factoring in the supply side of the equation. What might be overhead, what might get sold into you. And that's where things come into play, reflecting on the long-term daily chart. So, are there past high volume days where there's a bunch of people bagged from those days? Is there dilution? Things like that. So, when you're a beginner trader, I don't know if that stuff matters quite as much, because you're really trying to learn the basics. You're trying to learn risk management. And it's really important to get a solid foundation with that stuff. But then, as you try to get a little more advanced, then I think that's where it's all about play selection and being able to recognize the complexities of every single situation.
Yeah, and Tim, would you say part of that the play complexion is essentially understanding that just because from a supply and demand standpoint, if you look at it on a chart, if you say pick a certain level, while it may look like a demand level, right, high or low, or previously tested, double bottom, whatever, but it is still contextual into how that volume is distributed within that actual move.
I think I understand what you're saying. Yeah, the how it's distributed really matters. We see these high a day rejects all the time, right? Where you have the high a day break and there's just this huge surge of volume and the stock goes nowhere. Maybe just upticks a couple of cents, and then all of a sudden you get this death candle slam back.
Right. And then sometimes you have that uneven distribution where you look at the daily chart and it's a nice, above average, say 50 million print, right, daily bar on the volume. But then you look at it intraday, and 45 of them are in the first 22 minutes, and then it's nothing, right?
Yeah, and then it might be one player, making a big move versus multiple players. So, you might have one person pushing 500,000 shares of something, and that's very different than, in a natural market where many buyers are stepping in. So, yeah, thinking about supply, demand, and a way that, kind of comes to mind for me is each of those have layers. And, you have layers of supply coming from different places, and you have layers of demand coming from different places. So it's great to know that that's how you would want to, really have someone frame the market just in terms of supply and demand. And then, being able to, within that, design a system and look for setups and everything. So kind of going on to the next part is, if you were training someone to, manage your own money, or just someone who wanted to refine their trading, what kind of system would you most likely recommend that they do? Would you have something very strict and systematic, something that's more discretionary based on, market conditions, or something in the middle?
Something in the middle, I think. I mean, it also just depends on the individual and their situation. I mean, if you're a small account under PVT, you really got no shot at short selling, I don't think. You first of all got the major hurdle of even finding a broker where you can get shares most of the time. So that already limits you mostly to long strategies. And so if you're a small trader and you're trying to think about long strategies, you've got to go where the volatility is. That's what grows a small account, right? You're not going to grow your account scalping 1% moves over and over again. You need to be in the ones that have the chance at, the big 50%, 100% runs, that kind of thing. And that doesn't mean you swing for the fences on every trade, but you just want to know that kind of volatility is even possible.
Yeah. And I know that when we talked about, you designing some of your algorithms, that was a pain point where it's you can have something that's designed so well for one market condition, and then the market conditions change and the algo just doesn't work anymore. And so having the ability to have that discretion to fine tune things and constantly be adapting to it, that's just key. And that's really what allows people to move to where the edge is. And I'm sure Stan has some comments on, edge, but I think we're both curious about, where does edge really come from, and how do you look at edge in the market? And Stan, what would you add to that question?
Yeah, no, I think that as far as finding edge and then being able to scale that edge as well.
Right. And the ability to scale, I think, really comes from, the liquidity being present in the play. Mm-hmm. I got my start in OTCs, and it was back then it was a lot better than it is now. But, there was a period of time, I think right around 2013 or 2014, whenever the big pot stock boom was, when all of a sudden the SEC steps in, it halts all these OTC pot stocks, and then just OTC volume was gone. And, I had no choice. I had to go over to listed stocks, because even though I still felt like, I have some OTC edge, like, where's the opportunity every day? It's just not there, because even if I can enter in a play that looks like a halfway decent chart, I'm not getting any size behind it.
Right.
Yeah, 100%. And then on the topic of, a trading system, would you lean more towards a long-based system or a short-based system? And let's say it's someone who's, in the middle. They're not a beginner. They're not an expert. It's someone, say they have $100,000 account or $50,000. They have some market knowledge, and all things being equal with their personality and everything. What would you naturally want to guide someone towards?
I would probably guide people towards short selling, it's kind of funny to say, because, I've spent the last few years mostly away from the market. When I've stepped into trade here and there, it's been on the long side, because I don't want the stress of, accidentally putting myself into a squeeze situation and getting stubborn. I really completely avoided shorting for the last few years, and have been trying to ease my way back into it. But I feel like when it comes to, finding edge, I think that it is a lot easier to find an edge on the short side. And it goes back to that supply-demand imbalance, where, you can get the technical picture in your favor, where you get a stock with some nice overextension. Ideally, you can get that overextension into a level where there's warrants or some kind of convertible debt, or maybe this company has a big ATM that, they're just waiting to use until the backside of the move. So I really like situations like that where, and we see them again and again with the small cap junk, gaps and runs every day. It seems like every day there's a 100% gapper. So with the short side, for me, I've always viewed it more as okay, be patient, wait for the trade to come to you, and then, once that runner has run out of steam, and, you jump in there, risk high a day. That typically is where I'm risking, is high a day. And if there's dilution, even better. Whereas with longs, I feel like that's more of a guessing game. Which ones are they going to support? Which ones are going to have that next leg up? Even with a lot of the longs where I buy on high day breaks, there's still that element of, is this going to go 10% in stuff, or is this going to go 100% after hours? So with the shorts, a lot of them, that they're coming right back down where they came from. But with the longs, it's a lower odds, but I think a better risk reward situation.
And I mean, Stan, that's right in your wheelhouse. So yeah, please.
Yeah, I was just going to say, I think as far as the on the long versus the short side, the way it's perceived is when one of these, especially in small caps land, right, when you have a big run, it starts that clock, and it's only a matter of time. But this is where timing comes in, as what's next or where it's going to end up, but not necessarily on your timetable, right? It could squeeze a little bit higher, or if they create a market, now it's it's there for 5 weeks and or 8 weeks instead of 4, etc. Something that at least on my side that I've noticed.
Well, and I like what you said about it. It doesn't necessarily have to happen on your timetable, because we're seeing one today, QH, where that thing has tens of millions of convertible notes ready to dump at 35 cents. And last I saw, it was $3 after hours. It's, it's just massive squeeze and massive games right now. And, that's why I think that the first thing, like I said earlier, you've got to have stop losses. You've got to know how to get yourself out of a trade that's going against you, because if you can't respect the technicals of a chart, your lifespan as a trader is limited.
Right. And on that note, how important would you say the stock selection is as you're guiding the new trader?
I do think that's important, especially if you're talking about somebody under PDT, where you need to wait for the very best setups. like, when it came to me and stock selection, as I would pop in every now and then to long things, I was looking for, the ones with the least dilution, the ones with the lowest float. I typically came in for when sectors were hot. So, like all the AI stocks are running, all the oil stuff is running back when the Russia-Ukraine war started. Like those are times I would show up, and I wasn't trying to trade every single one of them. I was looking for the ones that I thought really could catch the most volatility and have the best odds of having a big move that held up. What comes to mind also is recently we had those monkeypox stocks running. You had GOVX and I can't think of the ticker now, but I know the one that went to 9. Do you guys know what I'm talking about?
There was VRAX and SIG.
VRAX. Yeah, VRAX. Like those two, when the run was first starting, had practically no dilution whatsoever. They had small share counts. Like there was a lot to, and then, they had hot sector news. And then the other two were APDN and TNXP. And APDN, that had, I think, something like 17 million warrants at $2. It did still make it to 3 eventually, but that was a lot more limited of a run than, we saw with GOVX and VRAX. And TNXP, I think it was a Monday. I think they gapped over the weekend or something. But the morning that TNXP gapped up, it had like this brief squeeze, and then I think it dropped at least 50% off of its highs because it just had hundreds of millions of shares to dump from a massive ATM. So, like if you want to be a trader who shows up and tries to trade a sector, or really this can apply to any kind of, day one gapper or whatever the hot stock of the day is, just like that right there can show you like how important fundamentals are to the move.
Yeah, and so there's a couple of things I want to touch on with what you just brought up. So in regards to trading systems, you mentioned the short side being usually a higher probability type of, trading system is more, short focused because many things do round trips. But in exchange for that higher probability, you have increased risk because the ones that get away from you can really get away. But kind of in general, a short biased trading system is one that is typically focused on mean reversion. Would you agree with that?
I would, yeah. Mm-hmm.
And then on the opposite side, when you're talking about a long bias trading system, and that's kind of like you tend to focus on that, in your day-to-day life from what I know now, does that deal more with what you would say would be trends instead of mean reversion? So like the monkeypox, sector, the AI sector, you basically have a flood of capital going into a certain amount of names. And those names you're looking for low dilution, low share count, and basically there's very little supply and you have a whole bunch of demand going in there, and that causes that. So would you agree that that's more of a trend-based system rather than mean reversion?
Right, yeah, trend-based, and just also, trying to anticipate the continuation of momentum.
Yeah, and so one of the drawbacks of having a system like that, just like how there's a, drawbacks to the short buy system, is that one, those sector trades are not always around in the market, and I think that we all can recognize that you might have a couple of hot sectors a year, and if that is someone's like only kind of system, then they might have long periods where they're not doing a whole lot, and that can be frustrating for someone who's looking to be a consistent trader. So whether someone's more long biased or short biased, both have benefits and drawbacks, but obviously you have both trading systems. So is that what you would really want for someone that you're training, to try to develop a strategy both long and short, or would you really have them just focus on one?
If I was training somebody, I'd want them to focus on one at first. I really think there's a lot of power to really put in all your focus into just one or two setups. Just find the couple things that you're most comfortable with, that you're best at, and that's where you dedicate your time. And that's where you start building the consistency. That was exactly the path that I took. And then it was almost like once those plays became second nature and I didn't have to, think so hard about them or stress so much when I was in one of those trades, that was kind of my moment where I said, okay, time to start branching out. So I started off with, like back in the OTC wild days, I was buying new promotions. I was buying OTC multi-day breakouts. And then, that was probably for 6 months. I was just doing those. And then from there, I said, okay, now I want to start trying to buy the panics. And then from there, I said, okay, now I want to start short selling these things because they're all zeros. And, I just added one thing at a time, as I kind of had the mental capital for it. So I blew up my first $1,500 because at first I was trying to do everything. I was trading like 8 different strategies and I sucked at all of them. So it really was just that narrowing in that helped me start getting that consistency and getting that confidence. So for a trader, I would absolutely say, start with just 1 or 2 things. Again, I think it's probably a little, if you have the capital, it's probably easier to start on the short side, but most people I think would probably start on the long side. And then you just want to look for setups that, you'll have opportunities almost every day.
Yeah, and I know that that's really the mindset of like what prop firms do too. Because if they're training someone, if a prop firm is training someone, their first goal is to make that person, kind of pay for themselves. And if they can, at least have one strategy or something where they're bringing in a couple grand a month, then that basically pays for that employee. And so taking that same idea into the retail world, we don't have someone overseeing us to really, drill that into us that, focusing on one setup at a time until you can become, pay for yourself basically, or at least be break even or starting to make money. And then once you master a setup like that, moving on to something else. And Stan, I feel like this is something that you're big on, because I feel like a lot of people don't do that because either 1, they think it's tedious, or 2, they feel like it takes too long. It takes, 3 or 6 months to learn a setup and really get after it. And that seems like too long of a time to just focus on one thing. How would you think about, someone having the patience to really, stack one of these on top of the other?
Yeah, I mean, I think it kind of goes back to what Tim was saying, and that is being able to focus on one at a time allows you to truly explore its depth of a strategy, instead of trying, seeing something and trying it and then giving it a couple weeks or a month. And I'd even go to say 3 to 6 months for one particular strategy may not even be enough. You may even need longer. There are certain strategies that I still trade to this day. Yes, they have modified and morphed a little bit because it's required as the market changes and adapts. But it has always started with one, and being able to focus on one, right, not looking for the shortcut, will build the right foundational blocks that then later on allows you to take leaps instead of steps. But if you skip that foundational block, it's going to be very difficult as you progress as a trader, right? You're going to be missing some core components. And I think, some ways to battle that, it's just don't think that this is a overnight success type of thing, or something that even if you've been trading for a year, 2, 3 years, and if you're not consistent yet, that's not necessarily a measure of success or a measure of progress, right? Consistency is where we're trying to get to, but it takes time. And the more you can focus on one thing at a time, the easier it gets as you come up against the next obstacle.
And then Tim, kind of to echo that, if someone is developing a trading system, they're looking for setups, let's say they're focusing on one thing at a time, how active would you assume that they would be? Would you think that there's trades almost every day or only a couple times a week? Or how would you think about that?
Part of that would depend on market environment, I think, for sure, and just what setup they're going after. But I think it would be pretty common when you're at the stage of only having one setup. I would not be at all surprised to have 1 or 2 days a week where there's no trades. And I think that's totally normal. And I think that's kind of where the successful traders are weeded out from the ones who don't make it, is the ability to actually sit on your hands and not take a trade all day. Because it can be hard, you're in these chat rooms, you're on Twitter, you see all these people celebrating their wins for the day because no one ever loses on Twitter, and you just want to be a part of it.
Absolutely. Okay, so someone has a system, let's say it's a long bias system and they're looking for, trends, or they have more of a short bias system and they're looking for more maybe mean reversion types of trades. What else besides, like a general bias or lean goes into a trading system? Does that, involve mapping out your position sizing? Does it map out, what is the expected value of a certain setup before, and doing that paper trading before they start doing it with real money? Like when you're designing or when you're training someone to basically develop a trading system, what comes to mind for you?
Yeah, so position sizing, I'm glad you touched on that because I think that's huge. Like one of the biggest things that I do in my trading, and I think a lot of traders do, is they have a set dollar risk. So, you'll have traders who they get in a trade and they just want to, say, oh, I'm only going to risk 1%, or oh, I'll just buy 1,000 shares every single time I'm in a trade, and then they wind up with these like wildly different risks. For me, I have always taken a risk-first mentality when I get into trading, or at least when I'm trading my best, I do that. Sometimes I do slip into trying to think about, oh, how much do I want to make? And then I do dumb things. But like risk first for me is like, okay, let's say I want to risk $1,000 per trade. That means that, if I'm buying a stock at $1 and I'm risking off of the 90-cent level, I can only buy 10,000 shares, because that is, with a 10-cent stop, that would get me to my $1,000 loss if I'm wrong. So it always starts with that. It's before I even enter, I know what's my risk level, like where on the chart do I want to cut if this goes wrong? And then how many shares can I take based on how close to that level am I, or how far away from that level am I? And then, sorry, can you remind me of the original question for what else I had to touch on there?
Yeah. Just in the topic of trading system, position sizing and, obviously risk management are part of that. And, what are the other things that come to mind with a trading system, and if you were teaching someone to develop one?
Yeah, I mean, obviously you want to figure out your entry and exit signals, which is something that I've always been, I feel like, better at the entry signals in my personal trading. And then with exits, I tend to struggle a little bit, especially on the long side. Like just today, I had a nice round trip where I went from up 60K to making 6K, I think, by the time I locked it in. So that was great. But, it was also a failed breakout, I guess. But yeah, you started off by saying you have to have a lean, and yeah, I think that's very important. And I think that can come from very simple data tracking. Just like if you want to short a gapper, for example, I mean you can build these really basic, simple stat sheets to just tell you like, hey, stocks that have gapped up 100% or more, or 200% or more, or whatever number you're looking at. You can look back years at that data and just see like what's the percent chance of it closing, below its open. Something as simple as that. So just to give you a bias on whether you should even be long biased or short biased out of the gate. And then you do want to try to build something that will give you a little bit more specific of an entry than just, oh, I'm just going to short it open. Because if you just blindly short it open, well, what happens if it squeezes 50% before it turns around and goes red? Like, do you really want to hold through that move on the short side? I sure wouldn't.
Yeah, and that is something that Nate is really just a total master at, of really getting good entries on things, and especially on the short side, waiting for something to exhaust out, to fail, and then to retest and confirm that it's done. And you're basically hypothesizing that you're on the backside of the move now instead of the front side of the move. So for you, and if you were training someone, what makes for an ideal entry, whether you're on the short side or the long side? Is it really just waiting for a spot that, for various reasons, whether it's supply and demand, is abnormally sturdy and you're using that as your risk level? Or how do you think about an ideal entry?
Yeah, so from the short side, I am a lot like Nate, where I'm looking at 1 minute charts. I'm looking for a hard failure on a 1 minute chart, compared to previous pullbacks. And then typically I'm looking for some kind of a bounce to get short into, and then just risk it off a high a day. That is traditionally how I've entered in the past. And then, as that chart develops, as the day goes on, there may even be opportunities to add and move my risk level down. But I'm usually the guy who's adding into strength on the short side, but after the top has been put in. With longs, I feel like those entries are a little more clear cut because, again, breakouts are just, waiting for the breakout level to get breached. So it's almost like it's right there on the chart for you. And you could put in a stop limit order and just, walk away and just if it breaks, you're going to fill. If it doesn't break, then the play never triggers. I guess the other thing that I have been working on with longs lately is I'm trying to, get better at buying during consolidation. But then that comes back a lot to play selection, because so many of these will consolidate, look like they're curling up, and then just eat it. And I put myself in way too many of those over the past few months. That's probably been my biggest struggle since I've gotten back to trading, is just massively over trading, consolidation, trying to, probably just FOMO, just wanting to be a part of the next big move and be a part of it earlier so I can get more size. And, my play selection has been terrible. And the kind of things I would use for play selection are sort of things we've talked about already, just looking for dilution, looking at what the float is, looking at the long-term daily chart, and are we above key levels? Are we below a bunch of key levels? If I think about some of my biggest wins since I've gotten back on the long side, they have all had news on their side, like where it's actually like pretty legitimate, significant news, like SERV with the NVIDIA stake, or I guess you could kind of argue how meaningful the BOF news was about earnings, but like saying that you have a 600% increase in your revenues, like that's never a bad thing. So it's when I can get myself in those situations where it seems like there's at least like news that reads really well or a sector behind it, like that really does help me. And those are probably the ones I should be more focused on. And buying during consolidation, the way I like to do that is kind of similar. I want to look for higher lows. I want to see, maybe the stock pulls back, sets a low, rebounds, consolidates for a little bit, and then breaks that rebound high, even though that rebound high is not the high of day. And then I can just risk it off of whatever the pull low was, or maybe the consolidation period. Where I get myself into trouble again is, like buying things like, I can't remember what the ticker was yesterday, but I remember that, like whatever press release they put out was like meaningless. It was like, oh, we've gone ahead and begun work on the next stage of our trial, like for our drug. And it's like, that's just typical, like company operations. Like, why did you even put a press release out about that? And of course I bought that twice during consolidation and lost both times, so it's something that you probably need to, you could track it honestly. Like, you can build a spreadsheet of the day's best runners and what was the news. That's an easy thing to copy paste over. So there's a lot of things you can do to try to help with the play selection side.
And Tim, something that you brought up, you talked about, key levels, and Stan, this is something that you're very focused on too. So, Stan, how would you try to get the information from Tim of thinking about key levels, or, how would you guys think about that? Tim, if you're using the view that you're training someone to trade, would you want them to be using key levels? And yeah, Stan, what about key levels should people know?
Yeah, I think the main thing about key levels is to understand that a key level does not necessarily invoke action. It could, but it doesn't necessarily mean that you have to do anything. It just means this is an area where if something were to happen, there's a high probability it's going to be around this area. So, that's the first thing that I keep in mind with key levels, and that helps with being stubborn once something doesn't work. Because then I'm no longer trading what I intended to trade originally anyway, because I shouldn't be up here or shouldn't be down here by this time, right? So I think that's the first thing for me when it comes to key levels. And then the next thing is they are a little bit of a lagging indicator, right? Because if you go, let's say, off like a double top key level or something, it's not truly a double top until you have that breakdown below the support. Then But for everyone that you assume it's a double top, there's 10 examples where it just goes right through, and it never looks back. So I think keeping that in mind as well, as if I'm trading around key levels, I'm willing to exchange a little bit of average for a little bit more conviction, perhaps, because now I have something to base a risk off. I may not have caught the top exactly or right at that key level, but now I can use that same key level and say, okay, now this is different. Before we were approaching it, now I have more information behind it, and now I can actually make a decision. Yep.
And Tim, do you think about that in a similar way, or what comes to mind, with key levels for you, and how do you use them, and how would you want someone else to use them in trading?
Yeah, I really like what he said there with regards to exchanging some average for, additional confirmation, because, like for example, if I am looking to short a stock that is rebounding towards its high a day, I don't necessarily want my goal to be, let's enter this blindly into this strength right here as close to the risk level as possible, because like he said, like we have seen so many charts where it just blows straight through. So I really might want to wait for that pullback and additional confirmation. And, my risk reward is going to be affected a little bit, but my win rate is going to go way, way up as a result. So yeah, like key levels to me, I really am big on like high a day, low a day. And I think that a lot of what happens in between is noise. I try not to let a lot of the choppiness in the mid-range of the chart psych me out. That was a big lesson for me when it came to transitioning over to listed stocks, because, maybe I would get into a short kind of up near high a day, near a key level, and it wouldn't break down right away. It would just consolidate, go sideways, and it would look like one of those situations where, it could break in either direction and you just don't really know. But I've sized myself in at that point for a trade where I have a set risk. I'm in a favorable risk reward situation, and I just want to let it play out, because if I'm the guy who just gets scared and says, I'm just going to cover this here and just take a few cents a share while I'm green, or I'm down a little bit and like I can't stomach that, I'm just going to take it off. I'm no longer trading my setup. Now I'm just kind of randomly exiting because of my emotions. Whereas, the setup calls for me to have that patience and see it through till the end of the day in a lot of cases. So I kind of lost my train of thought on where I was going on that, but just not getting straight out during the chop and having the patience. That was a big turning point for me with getting better at the listed stocks. Just as long as I get out when my risk is hit, that's all that matters.
We hope that you're enjoying this conversation with Tim Grittani about implementing real-world processes to become a professional trader. At Investors Underground, we give you all the tools that you need to be able to accomplish this. We have watch lists, moderator commentary, news scanners, some of the best AI scanners in the business. We have morning broadcasts, midday study sessions, midweek study sessions, and more. Join us at investorsunderground.com/trading takes to view special offers and how you could become a member. Now back to the conversation. Yeah, so on that topic of, exits and, even scaling in and out, I know that you mentioned that when you're short selling, you will scale in. So you might, put a starter in for something, watch it fail, retest, reject, and then, start to scale in with that. Do you also scale into positions with longs, or is it more one entry and multiple exits, or how are you thinking about scaling both short and long?
Yeah, so I don't know if I would really use the term scaling for what I try to do, just because the way I think about scaling is like if you only want to put on half risk at first and then put on more when you're more sure. And I've never liked that approach, because I just want to put it all on at once. So like if the setup is good enough for me to begin trading it, I want my full size risk. Because what happens in a lot of cases, and this is actually something I went through for a long time before I figured out how badly it was affecting me, is, if you are only taking that small starter, and then like maybe adding like as it goes against you a little bit or something, you're only ever going to be full size on your losers, and your winners may only be partial size. I did that to myself a number of times. So when I am building into positions, the way that I think of that is, I pick my entry spot. I risk my, $1,000 off of high a day, let's say, and then my add comes when I can move that risk level down. And moving that risk level down, then that allows me to, maybe I want to make my risk so that I'm break even off of that new risk level, or maybe I want to make my risk so that I'm still risking $1,000 off of that new level. But it gives me an opportunity to add shares while keeping my dollar risk consistent. And I think the term I've heard for that is pyramiding in, where you can really increase the reward you can get if you're right, while your max loss is always going to be just your typical 1 hour loss. That's kind of what happened to me with that long this morning. Actually, I was in BLMZ or whatever that fake breakout this morning was. I already forgot the ticker exactly, but I was in it from yesterday. I had kind of anticipated a bit. I was in from 220. And then this morning, as it was breaking out past the 280 multi-day breakout, I was putting on ads, but only as I felt like I could use new risk levels. So like right out of the gate this morning, I was saying, oh, 230 is my risk. So I can already add dips like semi-aggressively, because when I entered the 220 position yesterday, I was risking off of 2. So I went from having this 45,000 share overnight position to being long 75,000 shares with a 250 average. And even though the trade failed, I kind of sized myself in a way that I didn't even lose. Like it was a complete failure of a breakout, and I still made 6K. So it is, I think, a little bit more advanced than beginner traders need to worry about. I think beginner traders maybe should be more just concerned with the initial entry and just trying to get out at your target or at your stop. But I think it's a powerful tool as you go along in your career to increase R in some situations.
Yeah, absolutely. And something that you mentioned in there, maybe not directly, but range anticipation is such a key factor in selecting a setup. And the part of the reason why something like short selling can be more predictable and more profitable, sometimes, although you have increased risk, is that many times you have something that has gone parabolic. It's up 100%, 200%, and the range that you're anticipating it fading is many times half of that move or all of that move given a time period. So whether you're on the short side or the long side, how would you want someone that you're directing to really think about range anticipation, and where do you get the most in certain setups?
I mean, as far as like range anticipation, I think, you kind of get a sense of that from tracking. And just, I think one of the biggest reasons I was successful was because I tried to keep Excel sheets and log, situations as I saw them, because, situations repeat. So, as I would like log multi-day breakouts back in my early days, like one of the things I was paying attention to was, how far did the breakout run? Like what kind of possible reward could I typically expect on these things if they really work? And yeah, I think data is the best way to go for that, because, things don't have to exactly repeat, but, I think history rhymes is kind of the saying I've heard.
Yeah. So like when you were building your initial, kind of trading setups or other things, you were tracking lots of data, but, to even begin tracking a setup, do you think that it's worthwhile for someone to try to, track and kind of create a new setup, or should they be looking at, proven setups and just learning how to master that, since a lot of the data is, fairly constant and it's already out there?
Yeah, I mean, when you're first starting, I don't think there's anything wrong with seeing what other successful traders do and testing it for yourself. I wouldn't blindly accept anything that anybody says. I really do think there's a lot of power to doing some of the tracking yourself. But yeah, make it easier on yourself. Like I did not invent multi-day breakouts. I did not invent afternoon breakouts. Like that was something that I learned from Nate. I learned from Tim. I learned from, all these guys who came before me. And then I kind of put my own little personal twist on it in a way, as I went through my tracking. Like the example I always go to is that with breakouts, I always had heard the saying, oh, resistance becomes support, which I took literally. Like, oh, if the stock has a $1 breakout, it should hold $1 perfectly. And, then I learned like, oh, that's not the case. Like dips down to like 95 cents are actually really common. So the reason I figured that out is because I tracked a bunch. And like after like 8 botched breakouts, I was like, okay, wait a minute, I need to play wider risk. And then all of a sudden I was winning at my breakouts.
Yeah. And I feel like, being able to just watch that in real time is super important. And I know, like Stan, you do those midday sessions where basically when something's coming up or something's moving, you'll trade them or talk about them live. And I think that that's super key for like people who are learning or needing to see that in real time. And maybe we'll pull up some charts a little bit later on and we can go through a few examples of some trades that you've had recently, Tim, or some concepts. But Stan, on the topic of kind of like continuous learning, tracking data, Tim is a wealth of resources here. So what would you want to know if you were mentoring under Tim for some of those topics?
Well, I think one thing that I would like to know is the frequency of change of that data, right? As in, I pull the data today and then I go about my day, I learn my setup, and then 6 months down the road, something happens, right? The market shifts. So essentially, how frequently would one have to keep updating their data in order to stay current without getting some drastic results every time they run their query?
Right. I mean, I can kind of speak to what I did historically. And, historically, even though I did like my spreadsheets and do my data, I probably did not do things in a statistically significant way. But, it still was enough to like help me, which was great. So I would typically, go through my tracking, develop my setup, say that I'm comfortable with it. And then I would just kind of release myself into the market. And then I would just, I'm there every day in front of it all day. So I think that I was kind of picking up on some of the nuances without even really realizing it. But there would come periods of time where all of a sudden, things just did not work as well as they had been. Like I'd take a few losers in a row. Like it would just be like, hey, why aren't these things fading anymore? Because a lot of times I was shorting. And then it really would just be like, go right back to the drawing board and start tracking it again. And kind of, I would just ride it as long as it was good. And then as soon as I ran into a little bit of a speed bump, I would go back and start tracking. And we're so fortunate, now that there's so many great services out there for, getting data and getting a lot of data all at once. Because back in my early days, that wasn't really there. And it was a lot of like trying to remember, what were the runners? Like, let's go back and, look at all these old charts and hopefully I catch them all. Whereas now you really can just like build these scans like on a site like Spikeheap and, just get a list generated for you in 5 minutes.
Mm-hmm. Right.
Yeah. And then Tim, something that you've said in the past in, old interviews is when you've described, you were tracking data, but not necessarily in like an expert, statistically significant way, but you said it still helps. Kind of anything that you do, whether that's annotating your charts, saving charts, building watch lists, doing Excel sheets, what do you think that process is that helps people so much? Is it just taking a second look at something instead of in real time when the emotions and the adrenaline's going?
Yeah, I really do think that it's that. I operated with a much clearer head outside of market hours, that's for sure. And when I didn't have money on the line and have to worry about, do I have a stop loss in on this, or is this move a fake out or not? Like all kinds of distractions. I try to do data work during market hours sometimes, even now, and it just isn't happening because I can't focus on it whatsoever. So yeah, like when you put in that extra time outside of market hours, it's just more screen time. It's more chart review. Like it's like how, all the great, NBA, NFL, whatever sport players, like they spend all this time studying tape. Like, like any extra work is going to help give you more edge.
Yeah, 100%. So, and now I'd like to kind of walk through, let's say, we've talked about so many great topics and things that are going to help traders of all levels to really, craft and build a framework that they can use to actually, trade. So let's say that someone that you were training is like, okay, I've listened to this now. What would you want a day in their life as a trader who's being trained by you to look like? So like, what does that start with? Does it start with having a system, knowing your specific setup, and then scanning for stocks that basically fit that, and then planning your entries, planning your exits, the risk management? What would it look like for you?
Yeah, so I would say their work needs to start the night before. Like night before, run a scan, build a watch list. Like a scanner is a must. Like I use scans. I love scans. I think that it's very easy to use. Not that costly, but like even if you don't want to pay for a scanner, you can just look at like FinViz top percent gainers, and that's for free. It's 15 minutes delayed during market hours, but there's no excuse not to have some kind of scanner at this point. And then, yeah, it's build a watch list the night before. I would always kind of categorize it, like by setup. So like, what stocks am I watching for what potential setup tomorrow? And, I build out a couple general plans, like, oh, hey, here's today's 150% runner. So what's my plan if it gaps up? What's my plan if it gaps down? Because I probably wanted to be playing it either way. So then next morning, I was never a wake up at 4 a.m. guy. I know some people are, and that's awesome. But no, I was a show up to the market around 8 a.m. guy. And then it was, let's see what's gapping. Let's see the stuff on my watch list already. Let's start there. Let's see what direction the gaps are going. Let's adjust those plans. And then let's open up a scanner again and let's see what the new gappers today are. So I'm always looking for like, where's the momentum? And then I was, part of that watch list, part of that plan, it really, like you said, it is like, hey, where's my ideal entry? What kind of loose target might I be expecting in this situation? A lot of times I didn't like setting hard profit targets. Like I would like to try to kind of let the market action guide me. But yeah, that's definitely part of it. Thinking about what are you looking, more so the entries was my thing. Like, where do I want to enter this trade? Like, what am I looking for to get in short or to get in long? And then it's just, glued to the screens all day, keeping half an eye on the scanner. I would typically have to prioritize on the busy days. I could really actively trade about 3 or 4 things at a time. And anything more than that was getting a little bit too greedy. So on the busy days, part of the watch list process was like, what are the best ones? I was there for some of the COVID stocks. And like, my God, those were some long watch lists on those days. And it was like, if it was a day where I was long biased on most of the COVID stocks, then how do I prioritize those? Which ones have been trading the best volume so that I could, possibly get the most size without suffering huge slippage? The lowest floats, the cleanest charts, things like that would help me prioritize. And then, I'm just locked in all day. Like it was part of the reason I kind of wanted to step away for a while and got kind of burned out, was because I just would not leave my screen. So I'd be in front of it from like 8 to 4 every day. And then, the life change of going from no OTC after hour trading to all of a sudden I've got to monitor these stocks until 8 p.m. to make sure nothing puts out a press release and screws me over. That was a lot. So, the trading day really is just for trading mainly. If it was a slower day, I would try to distract myself with like a movie or TV show on one of my screens so that I don't overtrade and do dumb things. And then at night, it's, maybe it's data work if that's the phase you're in. Maybe it's just build a new watch list. But, like a lot of my time away from the screens still was thinking about the market. Thinking about what are the plays for tomorrow? What might I want to do? What are like, it was just constantly going through my head. It was like it's like borderline obsession, So I would hope to see that in somebody that I was teaching. Like they're not there because they have to be there. They're there because like they are addicted to the challenge.
Yeah, I think to some extent it does require that scary obsession, right? Because you're going to fail so many times. And if you're not obsessed about it, it's going to be not genuine every time you get back up. At some point, you're going to burn out and walk away. So I think that obsession is required.
Mm-hmm. Absolutely. Yeah.
Definitely. And then Tim, when you were kind of just walking through what a day in the life would look like, I mean, it's so similar to what, anyone who trades either professionally or does this, a lot, it's the same kind of thing that they're doing. It's what we do at Investors Underground by putting out, watch lists, looking at the action during the day, looking for your setups, and it's all just very similar. And I know that you used to be in Investors Underground, especially in the early days. And there's actually a funny story that you told me at Traders for a Cause about how back when you were still, I think, working at Progressive or something, you were in Investors Underground, but you were doing free trials and you kept trying to sign up, and Nate emailed you and yelled at you and was like, join or don't join, but stop doing this. So
yeah, it was something along the lines of I went to do a free trial, and then I can't remember why, but I was like, oh wait, I actually can't be in the room during market hours, so I canceled it right away. And then I tried to do another one, and then my summer job, State Farm, they had software that blocked the website, so I could not be in the chat room on my office computer. So I canceled again, and then the next time I tried to sign up, Nate chewed me out a little bit.
And I know that you and Nate go back a long time now, and you guys have been friends, and you've talked a lot. So could you share just a little bit about what you've learned from Nate, and how has that relationship been over the last 15 years?
Yeah, I mean, I feel like my earliest memories with like Nate's stuff is back in the day he would do free scans. So like it was part of my daily routine. It was read Nate's scan, see what his thoughts are. And it was really interesting reading his scans and his thought process on all the tickers, because I stole trade the ticker, not the company, from him. Like I was like, I love that saying, that's mine now. Like just the focus on the technical side, and price action rules all. It doesn't matter how crappy the news is. It doesn't matter how potentially dilutive the stock is. Like if the stock is still on the front side and still bullish, like get the hell out of the way. And reading a lot of his scans with just him talking about he always referred to like, oh, they might try to support it, or they might do this, like the whole like, oh wow, like stuff is really like a lot more manipulated than I thought. So it was really cool to see his perspective on that. But then like what I really remember and appreciate from Nate is early in my career, after I had like my first like major day where Fannie Mae, I made like over 200K in a day on that. I'm sure I posted about it somewhere, and like word reached Nate. And like I don't think I even knew that like he had my phone number at that point, but like he found a way to like reach out to me, and he's like, congrats on the huge day, man. Now like don't get cocky, like wire some out, like be safe. Like he was like there looking out for me, because I was still like 22 or whatever I was, and he probably thought that I was like gonna just YOLO it into the next play.
Yeah, I feel like Nate is known for showing up at those key moments for a lot of traders, whether it's after a big win or, even people who've had massive losses. And he seems to really, reach out at those important times. And I know that a lot of traders have said that it's made a big difference for them. So that was great to hear some of that. And so, Tim, before we wrap up, can we pull up a chart or two and then just go through maybe an example of a long setup and an example of a short setup, and then we'll wrap things up for the viewers. Okay, great. So this is an example of a long trade setup. So Tim, please walk us through this, kind of using what we've talked about in the discussion so far. What was your thought process? What was the setup? And how, if you had taught someone else to do this, would you want them to approach it?
Sure. So yeah, this is BOF, and I'll pop you over to a daily chart really quick, just to give you an idea. So BOF had been a runner that, not pretty much no dilution, pretty low float. They had news that read as very bullish. I think it was like a revenue increase of 600% year to year or something like that. So it had a lot of factors that I liked on the long side. And, I did trade it a bit early in the pattern, but the part that I want to talk about is the multi-day breakout, where this had now run for 3 days. And then on day 4, what we had was the break past this key level, which would have been the 266 high set on August 29th. Now that morning, the problem with BOF, and remember that the key level was 266, is that if you had waited until market open, it opened down in the 230s and then just kind of spiked straight through. And that is something that I do feel like I see a lot with multi-day breakouts. So with this one, I had to try to get a little bit more clever with how I traded it. So when this was gapping up pre-market and it set a pre-market high of 245, that was a level that I judged to be close enough to that 266 multi-day breakout to make it worth a buy, because I was thinking if this opens up in the market, like right at open and breaks past 245 after this couple hours of consolidation, that high at daybreak could very easily lead into the further spiking and the break past the multi-day level of 266. So when the market opened, I bought it right at 245 as it broke past the pre-market high. And my risk level, I was using this dip low right here. So this was down at 217. So I was able to size in about 30,000 shares because I wanted my risk to be about $10,000. And I figured there'd be a little bit of slippage if I did wind up having to sell this at a 217 breakdown. I figured I'd probably realistically exit more like 210. So hence my 30,000 share size. Now BOF, I kind of botched this one, unfortunately, because, and I'll go to a 1 minute chart now. As this was running in the morning, I just kind of got impatient and started selling. It was emotional sells. I wasn't letting the chart tell me to sell. I was thinking to myself, oh, I've been on kind of a bad run lately. Oh, it'd be nice to lock in some gains. And so I just kind of peeled off pieces randomly, where I sold some randomly up near 280 because, it just wasn't going up as fast as I would like. And then I sold a little bit more up near $3, just because there was no real reasoning behind it. And I don't like to talk with too much hindsight on charts, seeing how it wound up. But with plays like this, I always talk about, I want to let the chart guide me with my exits. And we talked earlier about waiting for hard cracks and failed rebounds to sell. And we're talking about that from a short seller's perspective, but I think it can also be really useful from a long's perspective as to when to exit the trade. Now, the first real crack of any significance I think you could say that we had would be here from 348 down to 315. Like that was maybe a little bit bigger of a pull than any of these previous pulls. And then of course up here at high day at 411, we cracked fairly quickly down into the 360s. So about a 50 cent retrace in this case. Now, I'm not saying that I should have, would have, could have held perfectly until 411 and then waited for this crack. But, ideally that's what I would do, is I would wait to see some real weakness on the chart and then be the person selling into the rebounds after that weakness.
Yeah, absolutely. And this is just such a great example of, a multi-day runner, a breakout holding higher lows. And then you can see that when it starts to speed up, it gets extended off of VWAP. It has that crack, that rebound. So it's really whether someone is a long bias, there's an opportunity there. And then, we'll get into a more short setup, in a little bit. But this in itself could have also been a short opportunity, using that same kind of strategy where you're waiting for something to speed up, for basically to exhaust out, to fail, rebound, retest, and then confirm that it's down too. So in a way, you almost have part of a long and part of a short here. But this is a great example of a long using a lot of those things that you talked about, where you were long bias. So if someone had a long bias system, this could be on watch. You basically had a setup. You were looking for it to break that pre-market highs, and that had been a key level over the last couple of days. Maybe you had some shorts using that to kind of to anticipate the fail, and then when it's going past them, they get squeezed out. More demand is coming in, and then scaling out along the way. I know that it wasn't perfect, but trading never is. But you still had a successful trade on this. It might have not have gone perfectly, but would you say that when it was all said and done, this was a worthwhile trade?
Oh yeah, it still wound up being a solid win. It just was disappointing because I knew that I had made some silly mistakes on it.
Yeah, and I think that's good that people know that trading is never going to be perfect, and if you have a good system, good setups, you have margin for error where you don't have to be right every time, but you can still have a good process that over the course of 50 of these trades, you're going to be net profitable. And then you've tracked that data to back that up. Is that correct?
Mm-hmm, yeah, that is.
Okay, so now we have an example of a potential short setup, and this was on WINT. So Tim, could you take us through your thought process with more of a short setup?
Sure, and this one is kind of funny because the daily candle in question right here is on September 4th, and it really doesn't look like anything all that special on the daily chart. Like it's not the huge extended chart you're used to seeing. But WINT, a little bit of the history here is that this thing had something like a 500,000 share float or below. and it had a bit of run back in July and early August. And then it had this big red candle kind of out of nowhere on September 3rd. And the reason for that is that they registered a bunch of shares that they were going to sell. So dilution. And I believe it was, I can't remember exactly what form the dilution was in, but I know that it was a lot of shares and it was in the low 3s and mid 3s. So they registered the shares on September 3rd, if I remember correctly. And then the morning of September 4th, it became effective, which meant those shares were then eligible to be sold into the open market. And the morning of the 4th, I believe this was a no news gap up. It just randomly gapped up, even though, all this dilution was all of a sudden present that hadn't previously been there. And for this, because of that dilution and because of the random gap up for no real reason, and then because of the fact that this had all kinds of pre-market weakness after that initial spike. I mean, a 650 spike with a fade down to low 4s. I mean, that is a pretty hard fade in my opinion. So when this thing was rebounding up the remainder of pre-market, it was very much on my watch list because I was thinking that, hey, okay, we've got a stock here that's about 60 or 70% above its dilution levels. And it's already got a pretty clear risk level up here at 650 for me to play off of the pre-market highs. And I have known through my tracking that, the pre-market ones that have the really big hard dips like this do not have nearly as good of odds as coming back and breaking the new highs as the ones that, have the gentler dips and hold a bit better. So I felt like I had a number of factors aligned here. I liked the technical side. I liked the fundamental side a lot. And I liked the fact that there really was no news. So right out of the gate, this thing was a short target for me. And just in the first minutes here, when it opened up and it started spiking up towards 580, and you had this big 800,000 share candle, it didn't really go very far. And then it started to fail. I just jumped in right away. I believe I shorted about 11,000 shares from 560, or maybe it was low 560s was my average. So, 11,000 shares, you math it out off of the 650 high, and there you go. That's $10,000 risk again. And because I knew about the dilution in this, because I didn't feel threatened by any kind of news, and just because it was so dang weak, it was a very, very easy patience hold for me on the short side. So I got my entry short. I would have absolutely added bounces if I had gotten bounces to add into, but, this thing was pretty bounceless all day. And I wound up covering my first piece down here in the low 320s when it was basing for a while, because that was down about the level where the dilution was at. And then we had further cracks sub 3, and it kind of went over under 3 a few times. I took off the rest. So that was a very nice. That's probably my best short I've had since I got back to trading and short selling again.
Excellent. And just, so many of those things that we talked about with, you had your short system kind of in play for this. You had a bias on something that was up on basically no news. It had increased supply due to the offering. You had a level to risk off of the open. You had the statistics behind it to show the range anticipation. And then you really had a strategy for an entry, and then you had a strategy for an exit. And so it really just pieces together everything that we've been talking about. And it's just great to see how that, plays out in real time. Well, this has been great. Tim, thank you so much for your time, for really walking people through how you would train them if you were their mentor or their, trading coach. We've covered a ton of topics, and I think that people should watch this video multiple times, take notes, and really see what they can implement in their own trading. So Tim, thank you for coming on, and Stan, thank you for co-hosting with me.
Yeah, absolutely. Yeah. And Tim, great to see you, and thanks again for your time today.
Yeah, thanks again for having me on, guys. It was a great time.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.